everyone, it's Kale from Scud Style, and today I'm bringing a little bit of a different video for you guys. Today I'm going to do a video on my top small-scale investment apps, and it's kind of more geared towards people that aren't super-duper wealthy. I am not super-duper wealthy, so I have not researched or experimented with maybe the best options for people with a lot of money. And I'll leave that amount open up for interpretation. But this is for people who maybe have some extra money, they have some extra savings, they're not sure what investing really is, they're not sure about the risks and stuff like that, but they have some extra income at the end and they maybe want to support a cause or play around with some kind of investing on the side without a ton of risk or a ton of money or anything like that. So there is inherent risk with any type of investing, but if you do it intelligently and you use some smart tools, it can be a very profitable thing to do and a way to make money without very much effort at all. So without further ado, let's get into it. The first one I want to talk about is something called Stash. And with Stash, you can build a personalized portfolio. I have used all four of these apps that I'm going to go over with you guys today. And there are two that I really recommend. I'm going to go through all four, their pros and cons. But I have personally worked with each of these, and I am not being paid in any kind of way to support or push any of these by these companies. I wanted to give an honest review based on my experience, my opinions, and things like that. So with Stash, you can build a personalized portfolio. It's generally a micro investing type app where you can start with $5. It's got a $5 minimum. And that's one of the pros because a lot of people don't want to, especially when they're new to investing, they don't want to invest a lot of money up front when they aren't comfortable with the process. They don't really know what's going on. They don't know the risks, as in, like, maybe they know on paper that there's a chance to lose, but they've never actually experienced, losing money in investing or any other kind of way. So the low minimum is definitely a pro for those type of people. It's also fun for those who want to support a cause. Stash, you can kind of choose different causes to support, and that's kind of fun if you want to do a little bit of if you care about more than just making money. If you want the investment to be something to feel good about, so instead of money just sitting in your bank account making pretty much negligible interest, because bank accounts are a joke these days, and you want to actually, have your money helping some kind of cause that you support and believe in while you also make money, Stash is kind of a cool thing to do with that because there are different options to support. And if you look at that website or you look at the thing, it'll show you a lot of those options. I don't have time to go into all of those today because I want to keep this not too long, but there's also a cool interface with a progress-oriented design, which is really helpful, and it keeps you kind of motivated to keep putting money into your accounting. Like, it keeps keeping you motivated to keep, maybe cutting superfluous expenditures or costs so that you can put them into your account and grow your account and get closer towards achieving your investment goals and things like that. So that interface is really cool for that. It goes towards next step, and it's kind of fun. So let's go over to the cons of Stash. And the fees are high relative, especially for a smaller account. And I'm going to go into this at the near the end of the video. I'm going to talk about fees specifically, but I'm really going to stress keeping your fees as low or non-existent as possible. And I know that makes sense, but some people will also discount and say, "Oh, $1 a month is nothing. I pay a lot more than that for Netflix or Spotify or anything else." But with investing, it's a little bit different because it's all about equity and how your money goes towards something else. So high relative fee, especially if your account is small, $1 a month is a large fee relative to other options. No control over individual portfolio items. This is another con. So I mentioned that you can support different portfolio items and things like that. You can support certain causes, certain portfolio mixes that support that cause. However, if you can't necessarily see what that portfolio breakdown is. So when I first started investing in Stash, I said, "Oh, this is really cool," but then I didn't like that I didn't know which exact stocks, different portfolio items I was actually investing in, and so I didn't really like that about it. So that goes into the next one, very limited transparency of your portfolio mix. It's the same thing. So not only can you not control individual items, you're kind of investing in a whole portfolio thing. And this might have changed since I've switched from Stash, but I was doing it not that long ago. But that limited transparency, I would like to see what I'm investing in, because if it's something that I think I believe in, right, but it's actually going into a stock that I'm not really that crazy about, or a company that I don't fully support, I really don't like that kind of cognitive dissonance, that kind of difference where I think I'm supporting it, but it's not fully aligned. And then final con is no real-time trading. For a lot of people, this won't be a big deal, but if you want to sell off, if your account is worth a certain amount and you want to sell it off because like the market is peaking or something like that, or you need the money and you want to sell it off at a time when the market's peaking, there's no real-time trading, so you can't cash in at that moment for what it's worth. It has to wait until the following open. So that would also be a con. So from there, I want to move on to number 2 in my top apps here, and that'd be Motif, thematic investing. So similar to Stash, Motif is you can support causes. I know that there's now a new impact investing branch off for Motif, but I didn't really look that much into it because the fees are a lot higher for that, and it didn't seem to make it worth it. You can do impact investing without having to do an impact investing, without having to actually select an impact investing account. You can just invest in things that you support, and then voila, you're impact investing. So thematic investing, basically in Motif, there's lots of pre-built motifs, they call them, which are like themed portfolios, which can have up to 30 stocks and different portfolio mixes within those. And so let's go into the pros here. So with these motifs, you can buy up to 30 stocks for $9.95. So there are trading fees here, but normally there's individual, for every stock you'd buy, there'd be a trading fee on a lot of online brokers. But with Motif, you can trade or buy up to 30 for $9.95, which is a really great bundled discount. If you want to support a theme, so you can go in and you can either pick a motif. So there's motifs about clean energy, about maybe certain type of industries that you really like, about maybe improving organic agriculture, and anything like that. There's all kinds of types. There's also green types of things you can support too. But for those who want to support around a certain thing and diversify our portfolio and have 30 stocks in your portfolio and only cost $9.95 to build that, obviously plus the cost of each individual item, that's a pretty good deal. So like I said, you can choose either a professionally built one, or you can build your own from scratch. So you can go and hand pick 30 different stocks, put them in one. It'll actually even weight them for you by market cap, and so that's kind of fun. This one's a fun one. I liked Motif when I was on it. I got, I'll go into the cons here about why I left there, but it was kind of fun building those up. Real-time trading fees. So if you want to trade just one individual stock from your up to 30 portfolio, it only costs $4.95, which is still high relative to other options out there, and relative to certain other options, it'll be really low. But compared to some of the other ones I'm going to talk about, I think that's not really a good deal, especially if you're going to be trading a lot. If you're going to do it once in a blue moon or something, not as big of a deal. But if you want to trade up to 30 at once, it's only $9.95. It's only twice as much for up to 30 times as much movement in the market. The other thing that's a con, as opposed to Stash, which I talked about before, is there's a $300 minimum to open up an account. So if you're someone who just has like, I'm maybe saving an extra 100 or so a month, and I don't want to put all of that into investing, $300 might be a little bit intimidating, especially when I talked about, I don't know how this stuff works. I don't want to, do the wrong thing. I don't want to lose a lot of money up front or anything like that. $300 can be an intimidating minimum, so I can understand, and that's a con. Best features are reserved for those who join Motif Blue at $19.95 a month. So, yes, there are a lot of extra features, and there's a lot of free trading, quote unquote, because you're paying a subscription fee for Motif Blue. So, if you don't have Motif Blue, then I always felt, which I got it included for the first few months when I signed up, but then after that was over, I had this feeling that was just like, I don't like that I'm getting the light version of this app, this account, when I can get all the features on other platforms for free included right off the bat. So I didn't like the $20 a month isn't worth it when you can do it other places for free. So moving on to my third choice, which is Wealthfront. And these are in no particular order. I'm just going down the line. And Wealthfront, passive, tailored, professional, are kind of what I tag that at in my experience. So I still have a Wealthfront account. I really enjoy Wealthfront. The pros of Wealthfront are there are no fees if you are referred. So they have a really cool referral program at Wealthfront, which means that if you sign up, if someone refers you, you have your first $5,000 managed for free, no fees. And that is massive. That is great, especially if you're someone who is, thinks $5,000 is a lot to invest anyway. But if you're someone who wants to invest more than that, then you can just refer a couple people, and for each person you refer, you get $5,000 managed for free additional. So if your account's growing past 5,000 and you refer one other person, you'll have 10,000 managed for free, and so on and so forth. But there's a lot of really good features on Wealthfront, and it's immense and reputable. Ton of money going through there. Very good rep. It's been doing it for a long time, and I've always had very secure transfers and interactions and everything on Wealthfront. So I feel really good about having a decent amount of money on there. And it creates a full, diverse portfolio that they, at Wealthfront, constantly monitor and reinvest into. So this is a form of, Wealthfront is more of a passive investing account, which is that you select, and it says this at the end here, fully personalized to your specific investing needs and goals. In the beginning of Wealthfront, you fill out a kind of questionnaire. It's not super long, but it's long enough, it takes maybe 10 minutes or so, where you can fill out details about your goals with investing, and it will custom make a portfolio mix. So you're getting a whole portfolio. So instead of just being full of stocks, U.S. stocks, like a lot of other things will be, it will build a portfolio of a ton of different things. U.S. stocks, foreign stocks, emerging markets. Some of the lower risk ones have things like real estate. There's municipal bonds. There's dividend stocks that pay dividends out. Natural resources, all kinds of things like that, and it builds a custom mix for you and your goals of different balanced things. And unlike Stash, there is full transparency. You know exactly what ETFs or stocks you are purchasing, and that for me was a big relief. And on top of not having fees, it's just the amount of money that you save and that gets reinvested into your account is very significant, and tax optimized to save you money where other brokers do not. At Wealthfront, they have something called tax loss harvesting, and so they really look at your bottom line before you even start investing, and across the way they do trades in certain ways where they trade certain things at strategic loss, which actually make you more money in the end because of a thing that they have figured out called tax loss harvesting. So that's a really cool feature that they offer. And once you invest, once you have a very large account, again, so not really applicable to people watching this video, but maybe if some larger investors are looking at this or have more money to play around with, once your account gets to something like $100,000, they do something called direct indexing, which reduces costs even more. So it's really cool. I recommend looking into them. And cons is no control over individual portfolio items. So because this is a passive investing type of thing, it's more like, it's great for, you put the money in there, I don't want to deal with the day-to-day stuff. I know my bank account is making nothing. I want it in kind of a place where it's actually doing something for me. And depending on what your goals are, it'll be doing something for you just with different amounts of risk tolerance. So you don't have control over which things you're individually purchasing, but if you're not a professional investor, you're not someone who is really savvy with this type of stuff, then it's kind of good that they are, the professionals are choosing your portfolio items and things like that. But you get to at least see what they are. No real-time trading. It's the same kind of thing. This isn't something you'd use to be trying to trade in real time. This would be something like you'd auto deposit into it with a certain amount of excess you have every month, and it will strategically place it within that portfolio mix based on your risk tolerance. And your risk tolerance can change. You're allowed to change it all the time, and it will redistribute your portfolio. It doesn't recommend you do that a ton, but if different life events happen and things like that, and all of a sudden you have a much higher risk tolerance, or all of a sudden maybe you have a kid and you have a much lower risk tolerance, it's really cool that you can adjust that, and it will invest for you when you put the money in, and it will invest for you at the best times, at the best opportunities. So that's really cool. So another con will be account minimum of $500, which is the highest account minimum of any of the ones I've talked about today. I will say, though, because of the diversity of the mix, I felt much better putting $500 on Wealthfront than $300 on Motif. So it's a very diversified mix, and if you're really worried about it, you can obviously put in a nice low risk tolerance and that kind of stuff. But I think if you have the $500, it's a great way to get a little bit of a boost to your account initially anyway. But of course, it's a con for some people who maybe want to do Wealthfront but are only comfortable with $100 or $200 initially. And they just recently added a 0.25% fee for all accounts, unless referred. So I'm gonna leave a referral link. If anyone wants to sign up for Wealthfront through this link, they will get their first $5,000 managed for free. That's the best you can get for Wealthfront these days. They just recently changed it because they're doing so well. Used to be 10,000 to 15,000 managed for free. But 5,000 managed for free is still really good, and it'll still get better if you refer other people. So I'm going to leave a link there. It'll get us both extra money managed for free. If you don't want to do it through my link, no problem. There are probably other referrers out there. But if you sign up just through their thing without a referral, you'll have to pay a 0.25% fee for any account balance in your account. So anyway, let us move on to number 4 here. Keep it moving. Robinhood. Robinhood is free investing, clean and simple. I'll just go right to the pros for Robinhood. Robinhood is so great because there are no fees and no minimum account balance. You could deposit $1 in Robinhood. There would be no fee. You wouldn't be able to purchase very much with that $1, but you could open an account for $1 or for very small and just start buying, very inexpensive stocks. You have full control over your portfolio, so you can opt to buy individual stocks or ETFs. And that is a pro for people who like to have control. And if you don't really want to have control, then I would recommend doing something like Wealthfront, where you just put the money in there and they will take care of it. But if you want to have fun, like, oh, I want to buy stock for this company, I think it's going to do really well, or oh, I want to play around with this, or oh, I want to support this industry, stuff like that, you just have to do it yourself instead of something like Stash, where it would pick a thing for you. So if you do a little bit of research on cool stocks in that industry or companies that you want to support, you have full control over it, you get to purchase it, and you get real-time trading. I'm going to skip down to 4 right there because it's relevant. And you can trade in real time. So you can wait until that dips for a day or a week or something and then buy then. It's kind of, if you're into that kind of stuff, it's kind of fun. I have a Robinhood account. 2 accounts I have right now are Robinhood and Wealthfront because I think they are the best in my experience out of the ones I've tried and researched. But the other thing is you have immediate access up to $1,000. I thought that was really cool. So when I started my Robinhood account, and I went to just do a transfer over, I thought it would take like days, for it to go to my bank and then go to my bank into my Robinhood account. But you don't have to use $1,000. You don't have to invest it up front. But if you were someone with like a little bit of mid-range, wanted to invest a few hundred or 1,000 or something, or a few thousand, like over time. But in the first week, the first day, and the first few minutes of signing up, you could purchase $1,000 worth of stock. So Robinhood kind of gives you that upfront. They kind of take your word for it that it's going to kind of clear. And so I think that's pretty cool. And then the cryptocurrency options trading and other offerings are rapidly expanding. They are offering more and more things on Robinhood, all fee free. They're trying to bring trading to the public, and I've never had a problem. Their app is really clean interface and things like that. And they also have a fun referral program. So like Wealthfront, you get those things. The referral program is great because you get 5,000 managed for free, which is really great. But for Robinhood, you already have everything, no matter how high your account is or low your account is. It's managed for free. So their fun referral program is that if you get referred to Robinhood, and I'll leave another referral link for this one down there in case you want to do it, you get a free stock. And so that might be worth a few dollars, or it might be worth $200. They have a big range. It's obviously weighted. You know, it's harder to get a $200 one, but it's kind of fun. And then if you were to refer people afterwards, you know, other friends who wanted to maybe try out investing for a low amount of money, because Robinhood has no minimum. So you could invest, you know, $10 in there, buy a couple stocks. You could go through the referral link, download it, get a free stock, have $10, whatever, in your account, and be trading. And maybe that thing will be good, and you can trade that stock and just add that money to your account, or you can just build a portfolio. It's just kind of fun. It's kind of fun for people who want to kind of ball out on a budget. You know, maybe add, you know, $20, $30 per month to their account and just do it for fun. You know, just check it. And so I really like Robinhood for that. I think it's fun. I'm no expert investor, you know. I like to think I'm pretty well informed on certain things. You know, went to business school, things like that. But I think that's a fun referral program, and it's nice that it already has no fees and no minimum. So it's relatively, I think it's the best option for someone who wants to start slow, feel it out, see if they even like it, and if not, just, you know, sell your stuff off and cash out. Anyway, the cons I would say for Robinhood are that you have no help. You have no assistance. It's kind of like a free-for-all type of thing. And the negative things that had happen on Robinhood would be that you go to do a certain buy, and it says you buy for this amount. And if you don't know the app well enough, or if you're not experienced a little bit, you might end up paying a little bit more for a stock than you thought you would be paying. So there's something called a market buy and a limit buy. And if you do a market buy, like there's a stock that it says it's trading for this amount right now, and you do a market buy, and maybe you have to buy it for a few cents more, or a little bit more. But if you learn how to do a limit buy, which is like you can do a specific buy parameter, and it says, okay, I'm only going to purchase it if it costs this or less, that's a way around that. But there's a few little things like that within Robinhood that if you've never traded before, you might end up, you know, trading off of a few cents, or might make trades that you didn't think. Also, there's no fractional trading on Robinhood. I know that's a super fancy thing. I haven't had that much issue on it, but it's something like Motif. They actually offer fractional trading, which means that you can buy part of a share. You're like, oh, I want to invest $100, but I want to invest $100 in some kind of small stock, but you can actually only afford, $100 would pan out to like 2.5 of those, so you can only buy 2. Robinhood, you'd have to have enough in your account to cover full shares of stock, and most places are like that. But there's a little things like that where you need to know a little bit what you're doing, because there is real-time trading, and that's an advantage. But if you're not careful, when you trade something, it's gone, it's happened, it's real time. So make sure you know what you're doing, and do a little bit of research. And that's why, if you want to start on Robinhood and you're really not sure, start small and get to know the interface a little bit, and then maybe you can put more money on and move on. But real quick, I was talking about how important fees are. And so I've got just these last 2 things. I've got an example on how fees hurt, and for something like Stash or Acorns, other kind of apps where they try to really appeal to the small stakes person who wants to try investing, but have like $1 a month fees and things like that, or any fees at all really, are going to hurt your bottom line a lot. And it might seem insignificant, like I said earlier, like $1, but hear me out here. I just want to show you how much this can really affect your account. So let's use an example of Acorns, where they have a $1 per month fee for all accounts under $5,000, and a 0.25% fee for all accounts over $5,000. So if your account is only $20, you're one of those super ballers who starts out, or just talks about because there's no minimum, you're giving up 5% of your equity every month, and 5% equity is good. Long term, you might expect to see more than that, but if you're not used to risk tolerance and things like that, 5% equity is large. And if your portfolio is not earning that or less each month, you're actually even losing money. So if your portfolio is earning 4%, which isn't bad, it isn't the best. It depends on what your mix is, right? What you're investing in. and what the risk tolerance is, but you'd be losing money because you'd be earning a 4%, but then you'd be paying back 5% equity every month, and so you'd be losing 1%. Even if you're earning a very impressive 10% a month, you'd be cutting your profit in half. This is huge. I know small scale might seem, oh, I'm just going to grow my account, but I'm just going to show this to you. This might not seem like a big deal, but maximizing equity at every turn is paramount to good investing, especially in a high-risk and volatile investing medium like stocks. The old adage of a penny saved is a penny earned applies here greatly. It applies everywhere, but it applies here greatly. So an example of equity loss from fees, if you had a $5 account under this model, which would be the minimum to start it, you'd lose 20% equity. If your account was $20, you'd lose 5%, $50, 2%, $100, 1%. And it goes down. And you can see it actually starts to diminish. It actually goes down to, I did a little bit of analysis here where the break-even point is if you have a $400 account, actually any account above between $400 and $5,000, the closer you can get it to $5,000, it's actually going to reduce your fees. But once you hit 5,000, your fees jump back up to 0.25%. And so psychologically, it's really not good to like, oh, I want to get my account to, 4,500 or 4,990. It's just a lot of stress. I guess you could sell off at that point, and that would be cool. But I think it would just be better to have no fees at all and not worry about it. So if you have a Wealthfront account, anything below the minimum or anything below $5,000 is going to have no fee. And if you have a Robinhood account, there will be no fee at all. And you'd just be motivated. You not have that psychological barrier in the back of your head that says, I don't want to grow it too fast because I'll have to pay a fee. So that's silly, obviously. But you'll be losing significant equity from fees, especially if you have a small account, especially if your account is under $400. I would not recommend a Acorns or a Stash because of that massive cut that you take to your account. That alone is worth not doing it. So let's go to the just my conclusion here, my final thoughts. So depending on your goals, my recommendations, the two accounts that I have left, I have since closed my Stash and my Motif and any other investment accounts. Depending on your personal goals, I recommend Wealthfront or Robinhood because they are very different types. Wealthfront is great for passive and retirement investing. I didn't really touch on it, but Wealthfront has a really great retirement investing tool. It has a really great different types of accounts for IRAs, 401ks, things like that. It also has cool tools for like saving to buy homes and other types of things like that. It is just a really cool if you want to just not worry about investing. You don't want to play around with it. You know your money is sitting there, not making you any money, and it's a waste. It's opportunity cost, all that kind of stuff, just sitting in your bank account making nothing. And you want to just take some savings and put it into investing and have it make money for you. I think Wealthfront's a great option for that. And Robinhood, I think, is a great option for people who, those ballers on a budget, those people who want to have a little bit of fun with their investing. They want to support certain companies. They want to feel like they chose, that they were smart about making an investment decision. They picked some good winners and then watch them grow over time. I think Robinhood's really great for that. Both of these, if you do them the right way, if you go through a referral, you get the free thing. Robinhood would be free anyway, but you'll just get an extra stock for the referral. But these are both really good options if you're intelligent about it. And Robinhood low budget, if you're super low budget and you have less than $500, go ahead and go for Robinhood, or save up for Wealthfront and just put $100 away each month or whatever works for you for 5 months, and then pay that $500 at Wealthfront and not worry about it and have the smart guys at Wealthfront do it for you. I personally use a combination of both to maximize fund stability and fee savings, so I don't pay fees on either, and it's fun to get. It's fun when I was first referred by someone, I got a pretty good stock, so that was pretty fun. And stability and fee savings, so you get a little bit of fun. I trade with much less money on Robinhood than I have invested in my Wealthfront account, and I think that's just a really cool balance that works for me. But I hope that this overall was a good quick primer over just different things to think about when you want to try investing for the first time. I gave 4 different options. I highly recommend the second 2, but if you like the first 2, go ahead, try them. Try anything you want. If you want to use the referral links down below, they will get you a better deal, the best deal you can get. If you don't want to, for whatever reason, you don't want to support me or you don't want to help out, totally fine. Doesn't matter. I'm just trying to get you guys the best deal out there, and have a little fun with this, but do a little bit of your own research too. Be a little bit responsible. I've just been doing research for a while, and I've been trying these over the past several years, and these are my thoughts, my conclusions. I hope you guys have a lot of fun with this. Use it for a little bit of financial freedom or intelligence, learning how money is working. And anyway, I hope you guys have a great day. I hope to make more videos for you guys soon. I really appreciate all the community involvement and comments and things like that. So really support any support to my channel. So thank you so much. And I hope you guys have a fantastic day and have lots of luck with your investment.